The war in the Middle East is heating up again. Whenever a major conflict occurs, investors around the world usually do one thing. They look for a safe haven, a place to store value when the world feels uncertain. For thousands of years, the most trusted asset has been gold. But now a new question arises. Can Bitcoin be a safe haven in the digital era? Or is Bitcoin still considered a speculative asset that falls when a crisis hits? Today we discuss this with a cool head. The concept of a safe haven is actually very simple. When the world feels unstable, when wars occur, or when the economy begins to falter, investors usually seek one thing, a place that is considered the safest to store value. A place where their wealth is not easily eroded by crises. For thousands of years, the asset that humans have most often chosen for this purpose is gold. Why gold? Because gold has several very unique characteristics. First, its quantity is limited. Gold cannot be created just like paper money. To obtain gold, humans must mine it from the earth, a process that requires time, effort, and significant cost. Second, gold is also difficult to produce in mass. There is no technology that can easily create new gold. This means that the supply of gold is relatively stable over time. Third, gold does not depend on any government. Unlike fiat currencies, which value depends on the policies of certain countries, gold stands alone as an asset recognized almost worldwide. And most importantly, gold has been trusted by humans for thousands of years. Since the days of ancient kingdoms, through various great wars, to modern financial crises, gold has always emerged as a place for people to store their wealth. Even to this day, many central banks in various countries still hold gold as reserves. It means that trust in gold is not built overnight. That trust is built slowly, through thousands of years of human history. And that's why when the world feels uncertain, gold is almost always seen as the primary safe haven. In recent years, Bitcoin has often been referred to by a rather interesting term, digital gold, or in simple language, digital version of gold. Why do many people make such comparisons? The reason is actually quite clear. Like gold, Bitcoin also has a limited supply. The maximum number of Bitcoins that can exist in the world is only 21 million coins. No more, no less. This number has been written in the Bitcoin protocol code since the beginning. This means that no government, no central bank, and no company can suddenly print new Bitcoins at will. Unlike fiat money, which can be printed in large quantities when the government implements certain monetary policies. In addition, Bitcoin also has another interesting characteristic. Bitcoin is not controlled by one country or one institution. Its network operates globally through thousands of computers scattered around the world. And unlike physical gold, which is heavy and difficult to move, Bitcoin can be sent anywhere in the world in just a matter of minutes, as long as there is an internet connection. Because of this characteristic, many people are starting to ask, can Bitcoin take on the role that has long been held by gold? In this digital era, will people start to see Bitcoin as a new generation safe haven, especially now that Bitcoin is about 15 years old? It is still very young compared to gold, which has been trusted for thousands of years. But in that relatively short time, Bitcoin has begun to attract the attention of major investors, from public companies to institutional financial entities. And that is what makes the debate about Bitcoin as digital gold increasingly interesting to discuss. In recent years, there has been a significant change in the world of Bitcoin. Previously, Bitcoin was almost always associated with retail traders, individuals who buy and sell crypto on exchanges. But now the situation is starting to change. Large institutions are beginning to enter the Bitcoin market. Some public companies have even decided to hold Bitcoin as part of their cash reserves. For them, Bitcoin is seen as an alternative store of value outside of cash. Additionally, the presence of Bitcoin ETFs has also opened new doors for institutional investors. ETFs allow large investors to gain exposure to Bitcoin without having to directly hold or store the coins. In a relatively short time, Bitcoin ETFs have successfully attracted tens of billions of dollars in investment. This shows that Bitcoin is starting to be viewed not just as a technological experiment, but also as a macro asset. An asset that is beginning to be considered in global investment strategies. However, not all large investors agree with this view. Many investment figures still believe that gold is far safer compared to Bitcoin. One of the prominent voices expressing this view is billionaire investor Ray Dalio. According to Dalio, gold has a long history as a store of value. Meanwhile, Bitcoin is still very new. From this perspective, Bitcoin is still considered too volatile to truly be a safe haven. The price of Bitcoin can rise or fall by tens of percent in a relatively short time. Such occurrences make some institutional investors remain cautious, because when a major crisis occurs, investors typically seek stable assets, not highly volatile ones. And indeed, if we look at Bitcoin's history, we can find quite an interesting pattern. Bitcoin does not always rise immediately when a crisis occurs. In fact, in some cases, Bitcoin has even fallen alongside the market. This phenomenon makes the debate about Bitcoin as a safe haven increasingly interesting to discuss. If we look at some major crises in recent years, Bitcoin does not always rise immediately. Many people assume that when the world enters uncertain situations, Bitcoin will automatically become a safe haven like gold. But the reality is often a bit more complicated. For example, when geopolitical conflicts in the Middle East heat up again, when news of an attack on Iran emerged in global markets, Bitcoin actually dropped about 4% before eventually starting to recover. Phenomena like this are not something new. A similar thing has happened before. For instance, when Russia invaded Ukraine in 2022. In the early phase of the conflict, many risky assets faced immediate pressure. Bitcoin was among them. A similar trend was also observed when the Israel-Palestine conflict escalated in recent periods. When uncertainty suddenly increases, markets typically react very quickly, and the first reaction of investors is often not to buy new assets. Instead, they reduce risk. In the early phase of a crisis, many investors do the same. They sell assets deemed risky and hold cash or very liquid assets. This is often referred to as the flight to safety phase. Investors want to ensure they have liquidity first before making new decisions. The problem is, to this day, Bitcoin is still often categorized by the market as a risk asset. This means Bitcoin is often treated similarly to technology stocks or other speculative assets, not like gold, which has long been considered a pure safe haven. That's why in many major crises, Bitcoin often declines in the first phase of market panic. Only after the situation starts to stabilize, can we see how Bitcoin truly reacts to those macro conditions. However, the story about Bitcoin during a crisis is not always that simple. It is true that in the early phase of market panic, Bitcoin often declines as well. But if we look further after that panic phase passes, something quite interesting often happens. Bitcoin tends to rebound quite quickly. In some cases, it even rises significantly after the market starts to calm down. This happens because after investors complete the first phase of panic, they begin to seek assets that are considered to have potential protection against economic uncertainty. And at this point, Bitcoin sometimes starts to attract attention again. A relatively recent example can be seen when the conflict in the Middle East heated up again. At the beginning of that geopolitical tension, Bitcoin did experience some pressure. However, shortly thereafter, Bitcoin actually rose again to surpass $70,000, even though the geopolitical situation was still not completely stable. Phenomena like this are causing some analysts to start considering more complex possibilities. Perhaps Bitcoin does not behave like gold, which is immediately sought after when a crisis first occurs, but Bitcoin may have a different role. Some analysts are beginning to see Bitcoin as a long-term hedge against global uncertainty. In other words, Bitcoin may not be a safe haven on the first day of a crisis, but it could become a refuge once the markets start to stabilize and investors begin to think about the future of the global economy. There is one major difference that is very important between gold and Bitcoin. That difference is time and trust. Gold has been trusted by humans for thousands of years. Since ancient royal times, humans have used gold as a symbol of wealth. Even before modern banking systems existed, gold was already used as a medium of exchange and a store of value. Throughout those thousands of years of history, gold has undergone various tests: great wars, changes of empires, economic crises, and every time the world experiences uncertainty, gold has almost always been regarded as a safe asset. Bitcoin does not have such a long history. Bitcoin only emerged in 2009. This means Bitcoin is only about 15 years old. In the context of global financial history, that is still very young. In addition to age, there are also other factors that are quite important. That is price volatility. Gold prices usually move relatively stable. Their movement can go up or down, but it rarely changes by tens of percent in a short time. Bitcoin is different. The price of Bitcoin can rise or fall by tens of percent in just a few weeks, sometimes even within days. This volatility is what makes some institutional investors still see Bitcoin as an emerging asset, an asset with great potential but still not fully matured. That is why, to this day, many large investors still place Bitcoin in a different category. Not entirely a safe haven like gold, but also no longer just a technology experiment like in its early emergence. There is one interesting piece of data that is rarely discussed. So can Bitcoin become a safe haven? Maybe not fully today, but history shows something interesting. Every generation usually has its own store of value asset. Thousands of years ago, humans chose gold. The current generation is starting to consider something different. The question now is not just, is Bitcoin a safe haven today? But the bigger question is, will the next generation see Bitcoin as we see gold today? Share your thoughts in the comments. Bitcoin, the safe haven of the future, or just a speculative asset?